Greetings, market rebels. Welcome to this week's sector situation. It is Sunday, November 26, 2023. It's a little bit after 11:30 a.m. here in the East Coast. I'm Wayne, and I'm going to get us into things because I am got a redose here on something, some kind of a cold medicine. Disclaimer, and here's our trusty intellectual property rights notice, and I'm just going to flash the macro measure discussion, the stream for the week that we talked about. Kind of a choppy, a little bit of abbreviated, but just want to get these taken care of because I've got to just take care of a few things, but also just get some downtime here. Let's see where we are on things. I've got to stop that and switch us over to a different screen. And now it's going to give us our grid view. And so I won't spend too much time on really much this week. I think it's safe to say a lot of the things that I said in macro measure, again, just in case folks don't watch that, but bottom line is the leadership areas like the XLK, XLC, the SMH, the MAG 7, those all look vulnerable at the moment. And so I think they could take some maybe big stuff. I've seen mixed reports online, but they want to spin the things positively to get the week started. I could see where, they could take that and try to work with that Monday morning, if again, without other news interfering, and spin that as a big start to the week, make everything look good, maybe even get more people drawn in, and then pull the rug on maybe a turnaround Tuesday or Wednesday or something like that. I do think this market is overdue for a pullback. Something like XLF has just been for this type of an ETF, the way that this typically moves, just a utterly remarkable move, right? It's overdone at this point in time. So, excuse me, let me just bring up a few things off screen really quickly. So yeah, I mean, it's just really overdone. You can see that these are overdone. A lot of these things like XLV finally caught a bit, XTN, they're not as overdone maybe, but they're getting there. Other things have worked back up, like discretionary, and XLP has also been working back up. Again, maybe they're not as extreme. Again, they could tack something on if they decide to take the weekend sales data and maybe Cyber Monday type stuff and work that into a great euphoric opening. Hey, the American consumer is still maxing out their credit the way we hope they would, and maybe they will get that. We'll see. But XLB, XLI is definitely, and XLB have been coming along as well. They're also overdone. So you've got a lot of, I think, overdoneness. I would point out that XLE has been a little bit more interesting, right? At least it stopped going down. It's been back and forth. Can't get out of its own way. To me, at this point, like I said in macro measure, I think that having XLE act better would be better for bulls, because even though it maybe doesn't help on the inflation front, it's still, excuse me, it still probably shows that, hey, maybe the demand's coming back. Maybe things aren't as weak as they appear to be, at least on some of the things that I come across, and especially really around the world. There just doesn't seem to be a lot of strength out there, China, etc. So we'll see if that does start to matter more, if it starts to come back. It is a market, of course, oil, energy, that has its own factors that you need to look at as well if you're trading it consistently. But it's showing at least a little something here, and I think that might be a good sign. That's something they could use to buoy the indices a little bit if they decide to take profits in a lot of these other things finally. But as I noted, right, as of now, the dollar yields, VIX were all falling. So really, if you're a bull, like really everything's working the way you would want it to. Let's see if we can pull up a couple of things. I think it's worth looking at SMH right away because it's such an important sector. And I think this is the thing that you could see that this is a little vulnerable now, right? It had this big sort of pop into, believe it or not, our former support line, got pretty much right to it and pulled back from there. It's had 3 days. It needs to support pretty much where it is exactly where I would put support at. in terms of like mini flat lines and 10 SMA there that's rising in white. But that doesn't hold there, right? That opens the door towards more downside, maybe a gap fill, maybe a visit to these moving averages. And probably, right, this is where the sort of path that you take through the calendar becomes interesting to think about, because the Fed meeting is what, I guess it's about 2.5 weeks away. And with that being the case, I think they've been pulling off rallies into and then through. And so if that would set them up perfectly really for the end of the year. So if they're going to have a little bit of a pullback and get it out of their system, it's probably makes sense to have the pullback sooner than later, get that overboughtness out of the system, maybe get real sly like a fox, make the market look listless for maybe a few days here and there, and then right start your jam job into the Fed, and then just keep going, and then print right near high, like some very high highs at the end of the year. That would probably be the ideal scenario. They have been sort of tracking the third year well. Third year calls for, of the presidential cycle, that is, calls for a strong deck. I'm a little worried they drew a bit of deck's performance forward with what they've done here in November. So maybe a give back, and then maybe that also helps deck to deliver on its promise. But they have been tracking this very well this third year, and so I don't see why we should abandon it right now. It's worth probably keeping an eye on. So I think this is the big thing. I think semis look vulnerable. As I noted, I'm not going to bring it up, but Mag 7 looks similar to semis right here. It also looks vulnerable. So I'm not going to go through all that. We did that in macro measure, but remember those leadership names looking a little vulnerable. I'm not saying they just get smashed. I'm just saying that they've got to get away from where they are, or they're really teetering on a little bit of a pullback, and that'll make some of these indices, that'll make it much harder for these indices to rise. And I think they'll, as leaders, a lot of those things, plus XLK, XLC, SMH, those things start to go down, right? That probably means a lot of these other sectors take a cue from there, and you start to see a little bit of a give back, because as I noted, even like an XLF, it doesn't look as impressive right here. But if you do give it a little bit more of expansion, you can see that it's probably got a little bit more room to get towards the highs. And I don't think you can rule that out. Like I said, probably earlier in the week for highs makes a little more sense to me. And maybe you get up there and there's this big celebration, but the kind of move that you've had, you don't really see XLF making this kind of a super strong move, very little give back on the whole thing at this point, closing very close to the highest high it's made. And so that is getting up there. In fact, let's take a quick look at that RSI reading of 74 on the daily. So again, does it happen at times? Yeah, you can get high readings when they start going bonkers, but you don't really see a lot of readings that much higher in something like this. So I think you have to take that for what it's worth. I think you have to be on guard that at any time you could finally start to see some profit taking, and a little bit of people that want to fight this rally who think it's bogus, and they could get pulled into this. So keep that in mind. While we talked about XLE, we may as well take a look at the oil future. I hope, and you can see that is sort of struggling much like XLE, but it's sort of sidewaysing, right? Kind of had a rough finish to the week though. So sidewaysing below the 200. You've got your short-term moving averages all down sloping, and now those are starting to fall below the 200. So that's really not a very pretty technical picture at the moment, other than the fact that it hasn't continued to slide and made a new low. So maybe, right, if they start breaking that back above the rust-colored 150 or the light blue 20-day, which is right near 78.50, call it 79, then maybe you could start to see something better happen with oil. But until as it stands right now, until it gets through there, I think it's pressured, right? And so probably the XLE would need to decouple from it a little bit and start getting ahead of it, and then maybe it could break out and do something. But I think the 50 there in gold and the dash white 100 are telling you where you really have to get through it and start feeling better, and it's a few percent away. So that's going to be somewhere near what, 80, 87.50. So you've got to get about 3%. from here to be able to take those on, take on a flat line that's there as well. So yeah, that's a big level. This thing trading up past 88 would be a good sign if it can do that. But if not, it's just this is your intermediate term trend right now, right? So if they continue to pressure it and this kind of catches down to the future, this thing could be off, off if the futures price holds steady, that could be off even more. We did talk about SMH. I'll just flash it again. There you go. That to me is vulnerable. It hasn't cracked yet, but it's vulnerable below that 10-day. Just remember, though, a lot of people are going to be coming in and saying, oh, it's my chance to short too. You probably will have company there, and you got to be careful for that reason. Here's the XLRE, this miraculous recovery, right? All it needs to do is get above the 200 in purple there. It's above all SMAs again at that point. Try to do the trend change. We were talking a few weeks ago, do these guys have a higher low put in? That question got answered pretty quickly, and you could see what the result's been. It hasn't been able to progress since that burst, though. So again, I probably would use the 200 here and say, okay, that's acting better. They keep dragging things up. They keep dragging them up. Even housing, which to me, this is remarkable, right? With what I know and what I've seen and how so many things are getting choked off with these higher rates and higher prices. But they've got the XHB. They've got that thing back to near you're not very far from the highs, the recent high. And then you have this highest high back here with the cup and handle working. So who knows? I'll be astounded if they can pull it off, but I won't rule it out. I mean, I really don't know how people are going to pay these prices at these rates with the economy really flashing what I think it's flashing, but maybe I'm wrong. We'll see. I would just go with the chart. But yeah, I mean, to me right now, that's a little bit overdone anyway. I think you're probably at like 60 something, right? 69, it looks like on your RSI still. So that's kind of running the course. I think IYR too, they've been running this one up as well. And that's in a similar place where it has to try to, overtake some key SMAs, and then it can maybe start to do something. So, but again, that's another real estate ETF. Let's take a look at the metals. So we did have some UOA in the energy space. We did have some in the metal space as well. And I'm not going to go through everything. I kind of alternate, but there's really this inverted compound head and shoulders pattern here on the daily and XAU, and then bigger picture pattern is, I'll just flash it quickly. That's the one with the sort of really massive cup and handle-esque type pattern that's in here. So keep an eye on it. It's getting closer and closer. I do think the technicals are slightly improving, but they just haven't gotten all the way there yet. So it's got to make more progress, but I do see more paper kind of anticipating that could happen. And I did add some ideas in our service as well on that. So it seems like there's a fight. This is a notoriously tough one to trade. At times there's no rhyme or reason. That maybe has to, I meant to type SLV. That maybe has to do with JP Morgan monkey hammering the price of these commodities down for decades and getting away with it. Can I make billions and billions and billions and billions and billions of dollars in now, and can I pay a fine later? That's really a slap on the wrist. And who wouldn't do that trade? Everybody pretty much, but the most rules, I guess, oriented folks, law oriented folks wouldn't do that, but a lot of traders that I know would. Anyway, SLV, you can see this did look better. It's getting a little bit ahead of itself. This is kind of some crazy gapping type action, but you see that again. This is one reason why this can be really tough to trade, but it's trying to really break out and extend. Could it keep going? Yeah. I mean, I don't really like this kind of a thing. I'd rather, as a bull, right, or would-be bull, potential bull, I'd rather see it not be littered with gaps and gaps and gaps, but you can't always get what you want. We know that. And it's right there. It's kind of like getting up towards the resistance. Now, my problem is that it's very close to overbought. That's why I like to do it. I like when things I'm bullish on, I want to just kind of see them grind their way up there and then not have to spend too much energy to break out. And right now, to me, like this really has spent a lot of energy quickly. So could keep going. I feel as though, if it does, you're looking at probably this 23 level. We're not probably looking at a big move again in the absence of massive news developments. But that's why I've got to put these in, because there can be news developments that bring bids into this. But this is definitely looking better. And I think, right, if it does have a strong finish to the month and breaks out of this corrective consolidation that it was in here, that would be a good sign for what could happen right next year. So just wanted to kind of note that. Excuse me. GLD, this is looking a little toppy to me up here too. But again, news can really make these things shift around. Oops, meant to expand on that and I contracted it. So a little bit of an M kind of look to it, double top, maybe a little bit worse RSI readings. Nothing incredible, but little concerning there. But this is nice that it found support right near some of these more widely followed SMAs, and then it lifted up there. Now it just did it kind of in a somewhat relentless fashion, which again I don't like. I'd rather not have that and rather have this kind of slow grind up and then not really be anywhere near overbought once you get there. So you can push through more easily, but that's not what they do all the time. Unfortunately, you got somewhere probably in the lower 60s, so not too bad, but this does have room to go. But right, this is really at a critical area, because can they take the strong leg and relatively mild pullback from that strong leg and work with it to create another strong leg and start really getting up there? And that's what that's what I think you have to see. So that's worth noting. Now, another thing that's probably worth noting is, and I just don't know, I don't want to read too much into this, but the XLY, this is really the sign of the consumer for me. Where are they getting things going? Are things really starting to pick up for real, and the consumer is really humming, or is it just kind of a lot of smoke and mirrors? We'll see, right? It hasn't broken out yet, but I would keep an eye on, let's say 171 roughly, right? Somewhere around 170, 171. It gets up there and you're not overbought and they start to push that through, that would also be a good sign, right? I think that's one thing that would be a good sign, because I think the consumer, the consumer to me is already in trouble, but a lot of people don't seem to be acting that way, maybe according to the news I've seen on formerly Twitter. And then here's the transports, and they're telling a little bit of a different story, where you can see they're really not bouncing back in a big way. And that's another thing that has me worried, that these are just not bouncing back, right? So, the dollar down, gold and silver looking better, consumer maybe looking a little bit better than I thought, or is it just a reactionary relief type rally? Transport's not showing anything great. What about, some of the other ETFs that would show you? We don't have the lumber. I don't think we can get LB unless they brought it back for us. Random length lumber. Let's see if we can get. Let's see if we can get something here. Nope, I don't think it likes that. Oh, maybe it does. Let's see where it's got me. Okay, so it does have that. So, all right, so we have at least this to work with, but you can see that's really trailed back up with the housing market, right? And we haven't looked at wood and cut in a while as well, but these are probably doing something similar, right? And they are. You can see that's had a good move back to the upside of its range. Again, I think these, to me, like I would still trade the technicals, on not necessarily these, but things related to this in the housing market. It just does. This is one of those areas that just continues to astound me. But look, it had this nice little corrective activity after this burst, held on to the 10 SMA in white that's rising. So, right, if it starts to go again, you could see more pop here. So, and I think if rates keep sliding, right, clearly that would help. That would be very helpful. And I think the gang's already got it figured that right, rates are going to be coming down, which really isn't a good thing for them a year later, but they might be able to get celebratory in front of it and maybe keep things looking good for a little while after it. And I guess history doesn't have to always repeat too. But I'm trying to think if there's anything else I can take a look at for us real quick, try to help out a little bit. And I don't think there is. Between both videos, I think we covered the main stuff. But yeah, so just keep in mind that there's a little bit of paper in UOA type paper in both energy and in metals. And so might be an interesting area to keep your eye on. Again, not easy places to trade in my book, but they can be very interesting at times. So I think I'm going to wrap on that just to kind of get started with some cold medicine again. And I'm going to just wish everyone a great conclusion to their weekend. I hope everyone had a great Thanksgiving, great safe Thanksgiving. And I want to say have a great week ahead. I'll be in touch between coughs. I'll be in touch through the webinars and updates and so on and so forth. So everyone take care in the upcoming week. Thanks for tuning in.